BenzingaMomentum Halt, overnight rally fizzles after 10-year yield climbs back above 1.6%. Friday's momentum melted away like snow in the March sun. Then it appeared to come back, at least for parts of Wall Street. The Nasdaq comp isn't one of them. Things didn't start out all over the place like they are now. Major indices initially rose in sync during the overnight session after the Senate passed the $1.9 trillion stimulus bill. The full-service rally didn't last. Weakness in Asian markets and the 10-year Treasury yield climbing back above 1.6% might have done the trick. The Nasdaq comp, home of many tech stocks, seems to be taking it worst in the early going. Tesla Inc., Nasdaq, TSLA, and Apple Inc., Nasdaq, AAPL, are down in pre-market trading. One reason we rallied so much Friday was a leveling out in the yield. Now that it's climbing again, for the moment, tech stocks may face a headwind from fears that higher yields point to potential higher inflation. The bond market is telling us there's a lot of money in the system as more people get back to work. And with all this money coming back in, people are concerned, especially with U.S. debt now more than 100% of gross domestic product, GDP. Finding some separation, there may be some bifurcation developing on Wall Street today. Tech stocks are getting whacked, but these higher interest rates may not be the worst thing in the world for banks. That means the Dow Jones Industrial Average (DJI) and the S&P 500 Index (SPX) could be separating themselves a bit from the comp. The Russell 2000 (RUT) and the DJI turned slightly higher as the opening bell approached. Remember, the RUT is where many mid-sized banks trade. We're in that time between earnings seasons where corporate news sometimes gets thin, meaning the market can get led around by developments outside the financial world. Stimulus is one of those, with the House expected to vote this week. However, most of that appears to be built into stock prices already, so new catalysts might be needed for a sense of direction. Each time we go up, sellers appear, and any downward moves get met by the dippers. For now, anyway, major indices could be range-bound unless there's some big outside news. Some of that outside news could come from across the pond, so to speak, as the European Central Bank (ECB) meets later this week and faces the question of what to do about rising bond yields over there. This happens with the US dollar recently touching 3-month highs. The dollar might be getting some help from last Friday's strong US jobs report. Don't forget another feature, volatility. It could hold the key to this week's markets. The Cboe Volatility Index (VIX) pulled back Friday from its flirtation with 30, but began the week pointing slightly higher. It's still below 28, but keep an eye on it. Meanwhile, it would be nice to see some buyers in the Nasdaq. That's probably got to happen for the market to get back on its feet.